Could $5 a day really grow faster with weekly ETF buys or monthly stock purchases? In February 2026, I tracked every single dollar, and the results are eye-opening. By the end, you'll see which strategy actually gave me bigger gains and how you could apply this to your retirement plan. Don't skip this. The numbers might surprise you. Hey everyone, if you're new here, I track down small dollar investing strategies that grow real wealth over time. Today we're comparing weekly ETF buys versus monthly ETFs and stocks with my actual February 2026 portfolio numbers. You'll see exactly which approach worked better. I'm going to start with February 5th. That was CHPY. That is the UMAX Semiconductor ETF, $13.14. GDXY, which is the Gold Miners Yield-Max ETF, 1853. You see QDTE and its sister fund, XDTE. AGNC is a monthly payer, $26.73. CHPY, which is the Yield-Max Semiconductor, $7. GDXY, QDTE. Main is Main Street Capital. That is a BDC. They offer loans to medium-sized companies. That's 1155. XDTE. That one takes care of the S&P 500. CHPY again. SPYI. The monthly was $39.35. QQQI, which is the Nasdaq 100 NEOS fund, $38.58. You see QDTE, GDXY, XDTE for $10.98. And the end of February, it's CHPY again, $6.89. QDTE, GDXY, IDVO, which is the Amplified International ETF, $16.54. They pay monthly. And XDTE, which is the weekly fund. Now I'm going to take you to my portfolio and go through to my dividend log just so that you can see what everybody paid me for February of 2026. As you can see there, SPYI was $39.35, QDTE $81.86. I've already started to take some get some dividends for March. GDXY was $76.55, CHPY $27.74 is total. And you should come across now to my Roth IRA. QQQI was $38.58. That is a monthly payer. IDVO, that's another monthly payer, $16.54. Main Street Capital, $11.55. AGNC, that is for $26.73. That is a real estate investment trust, a REIT. And the last but not least, going all the way over, XDTE is the S&P 500 fund from Yield-Max. That was $33.85. But what was astounding to me was that if you add everything up, you would figure that the weekly payers would surpass the monthly payers by a lot and not as much as you think. So, even though I invested more weekly, the strategy difference is really about timing and dollar cost averaging versus lump sum buys. By the end of 2026, that's how my investments performed. The takeaway, even small investments can slightly outperform monthly purchases, even in volatile months like February. Dollar cost averaging works. Here's why this matters. You don't need huge sums to make an impact. Weekly investments smooth out market swings, while monthly buys are simpler to automate. The key is consistency, not timing the market perfectly. And remember, your monthly buys included individual stocks, IDVO, Main, AGNC, along SPYI and QQQF ETFs, which adds another layer of potential growth or risk depending on your market moves. So, the main takeaways from February 2026, weekly ETF buys, QDTE, GDXY, CHPY, XDTE slightly outperform my monthly buys in total growth. Monthly, some purchases are simpler, but can miss market dips. Small daily investments, even just $5, can add up to real growth over time. Now, if you want to see how just $5 a day could grow into a retirement fund in Panama, yes, really. Check out my next video where I break it down with real numbers and projections. Comment below, are you team weekly or team monthly? And don't forget to subscribe so you can follow along as we test strategies like this every month. Thank you for watching.